at this market, folks. Bob Pisani down at the New York Stock Exchange. I know it doesn't look like much. Dow's up 26, the S&P up 5, but we were down rather noticeably at 11 o'clock Eastern time a few hours ago, and the markets again turned around. Essentially what's happening here is we are closing at the highs for the third day in a row, and probably 7 or 8 out of the last 10 days. The market's got tremendous resilience. The Federal Reserve is out of the way, but the single most important factor is the terrific earnings reports that we are getting. They're simply above expectations. That's what's delighting the traders and why we're getting such great volume down here. We're passing 1.7 billion shares right now. We hit 1.8 billion yesterday. A lot of skeptics who a few weeks ago said no more for this market. We've had it. We're going to take care of it. We're going to take out some puts. They're forced to come back into the market. Terrific markets right now. There's the closing bell, and of course, you know what's up next. Closing bell. He's here, Dylan Ratigan.
Well, add another 25 points to it. Another day, another record for the blue chips in America. Good afternoon. I am Dylan Ratigan. Maria Bartiromo will be joining us from Hong Kong a little bit later. The focus right now on Wall Street, however, Microsoft's latest quarterly results, minutes, potentially seconds away. Keep it here for numbers and instant analysis. A big quarter for them as we set up earnings continue to drive this market all in. The blue chips climbing to uncharted territory once again today. Dow Jones Industrial Average adding 26 points. You'll see here at 12,061. This is the fourth consecutive record and the 13th record in the last 17 trading sessions for the Dow. The Dow moving higher despite a nearly 2% drop in shares at GM. Merrill Lynch downgrading that one to a sell. It was a buy at Merrill. NASDAQ strong too. Comcast with a sensational day. The chip stocks continue to perform, and you can see it got stronger as the day progressed. Almost a full percentage point advance, a 5-year high for the NASDAQ. S&P now onto a 7-day winning streak. The index at its best level in nearly 6 years' time. The telecom stocks also delivering for the market along with technology and those cable names, along with a lot of consumer names, all performing today. Also helping stocks, a big drop in oil prices. Light sweet crude ends down over $1. That too adds fuel to the fire as again the market overcomes that downgrade on GM. And Bob Pisani, our eye on the floor at the New York Stock Exchange. Bob.
And Dylan, it happened again. It looked like we were heading down in the middle of the day, and once again we turned around. The bottom line, markets closing right at their highs. This is now the third day in a row that that's happened. We had terrific internals late in the day that held up 2-to-1 advancing to declining stocks. Great volume. We're past 1.7 billion shares. As far as other market internals, new highs, past 250 new highs at the New York Stock Exchange. That's the best number I've seen since January earlier this year here. We had a bunch of stocks come out with terrific earnings today. Take a look at some of them. ExxonMobil hit a historic high during the day. They had a terrific earnings report. These energy stocks have been doing better, but Exxon is the first one to hit a real new high. We saw Aetna with a great day, up about 7%. They did very well. Comcast had a 52-week high. That was up 3%. OfficeMax, some of the other ones. Kellogg's all doing extremely well here today. And there you see some of the ones. Dow Chemical also did well despite higher costs here. Why is the market advancing? Look, you hear about short covering a lot, but that's a cause. It's not necessarily an effect. There's a reason people are covering shorts. Here's what's going on. First, the soft landing is looking increasingly likely at this point. That's an absolutely key factor. Number two, the Federal Reserve is out of the way. Number three, we're seeing oil and interest rates continuing to move down to the sidelines, or to this downside. And finally, the single most important thing, earnings growth, stronger than expected. 17% growth in the S&P 500 for the third quarter now expected. That is the best results that we've seen since the fourth quarter of 2004. Dylan?
All right, turning to the economy itself, another relatively upbeat reading on the housing sector out today. Sales of new homes shot up 5.3% for September. Forecasters have been looking for sales to remain unchanged. Buyers spurred on by big builder discounts. The median home price tumbled 9.7% from a year back, goes to $217,100 as a median for the month. It marks the steepest year-over-year decline since December of 1970. And as we saw with yesterday's existing home sales report, inventories of new homes slipping 1.9%. That's the biggest drop we've seen in 6 years. As we move to other economic news of the day, there was a spike of 7.8% last month in orders for goods made to last longer longer than 3 years. Durable goods, that nearly 4 times more than forecast, and the biggest jump we've seen in 6 years' time, though much of that gain was due to commercial aircraft orders. You back it out, it gets a little bit more moderate as the Treasury market shrugged off the economic data, ended the session higher. But the biggie to watch still, we talked about this yesterday, we'll talk about it again today, tomorrow's third quarter GDP data. We get off to Rick Santelli. He's at the Merc in Chicago. Rick.
You know, and Dylan, it's always good to give both sides equal time, and even though that soft landing mentality is really driving interest rates lower, it's not helping the dollar much, and it's up to you.
And the big stock story of the day, at least one of them, ExxonMobil, latest quarterly numbers came out this morning, world's largest publicly traded oil company and largest traded company, period, by market cap, pocketing a cool $10.5 billion in profits between June and September. That works out to $117 million each day. It was up 5 points as capital management, along with CNBC's Bob Pisani. Bob, set the stage. In other words, how relevant has energy been to where we are, and how much of a liability is it from here?
Oh, I think energy has been hugely important. When I call around on the floor and say, why are we having this continuous rally for the last 3 months? The S&P is up 11%. Best rally we've seen in the last 3 years. Decline in interest rates and decline in oil figure very prominently. Also, the decline in the big move up that we've seen in earnings expectations here, Dylan.
Kevin, how are you putting new money to work right now?
I think we still have a trade in the long end of the yield curve. I think that we can rally the long end between here and the end of the year. I think that the S&P closed a little bit lower than where we are, 1350 at the end of the year. Going out from here, I still think large caps is the leadership.
Large cap across the board, or is there a side? I know large cap tech has done well. We just talked about energy. Pharmaceuticals did do well until recently. Telecom too.
Yeah, by sector, I would say I'd like to see growth companies over value. I'd like to see the defensives, whether it's healthcare, utilities, whether you're talking about staples. I know that that technology is not defensive by nature, but I think it's been so beaten up in terms of valuation, you have to step in and buy a little tech here too.
What's your view, Chuck? What are you doing with new money?
Well, we're actually avoiding the bond market. We're buying the areas that are really cheap, like retail. There was that whole view that the consumer was in trouble some months ago. We see the consumer benefiting from lower gasoline prices. We expect a very strong Christmas shopping season. So we think the retailers have been beaten up. There's great value there. Restaurants, some of the same logic.
Retail not as cheap as it was 3 months ago, though, Chuck. We actually had a pretty good rally. You look at Nordstrom, you go down that list, they've become higher priced stocks over the past 3 months.
That's absolutely right. Kohl's, which is one of our favorites, has really taken off. But there's still plenty of values. Chico's is still pretty cheap. Bed Bath & Beyond is cheap. Both of the home improvement retailers, Lowe's and Home Depot, both very cheap. So there's still a lot of value left on the table.
How many people, Bob, are you talking to that are making the argument Chuck's making, that there's still value out there even as we talk about records on the Dow?
You know, Wall Street traders don't talk so much about value as they talk so much about whether or not there's more upside to the market overall. The big debate down here right now has been, are we stealing from the traditional gains we get in November, December, and January for the gains that we have now? I have to say the majority think no. The majority believe that the fundamental underpinnings are so strong to the market right now that we can still continue to get gains into November and December. The rally's been very unusual, Dylan. We're straight up 12% since the bottom in July, but the majority here is still quite bullish.
Kevin, where do you come down on that argument? The argument of stealing gains, as it were.
Well, I don't really bet on seasons. What I bet on is the fundamentals of the U.S. economy, which, while they're going to settle down a little bit here, I think that the outlook for 07 is not that bad. We may have some slippage in the durable areas of the economy, but the broad, diverse U.S. economy, the U.S. consumer is going to hold out, and I think that you could be looking at an S&P 500 that's perhaps 10% higher from where you are today, maybe 1475 or so.
All right, listen, all three of you, thank you, gentlemen. As we square up on 10 minutes after the bell here, we are potentially seconds, certainly minutes away from Microsoft's earnings. We saw Apple, we saw Google, we saw IBM, and of course we had Amazon earlier this week. Will Microsoft deliver? Expectations are very modest for the company right now. We'll get that to you as soon as it crosses the wires, as we're now only 12 days as well from the midterm election. Republicans at risk of losing control of Congress. Is big business at risk of losing something else? From Wall Street to Main Street, we're taking a closer look at who might benefit from a power shift in D.C. as JetBlue landing where it has never flown before. Which airlines could face a new challenge from the discount carrier's plans for expansion?
You're watching Closing Bell on CNBC. First in business worldwide.